Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Our top story this week is the surge in Canadian mortgage originations. In June, mortgage originations hit $40.7 billion, which is up a significant 27.5% from last year. It's the second biggest month on record. This might sound like a positive sign, but it's a bit more complicated than that.
Absolutely, Steve. While such a surge would typically indicate a renewed demand in housing, that's not what we're seeing here. Instead, this increase is largely due to a flood of pre-construction deals from the investor boom between 2020 and 2022 that are now reaching completion. Many buyers from that period are now seeking financing as their projects come to fruition.
Exactly, Janine. It's like a delayed bill from the frenzy we saw a few years back. The home sales themselves remain weak, so this isn't a revival of buyer interest, but rather an obligation that needs to be met. It's crucial to understand this context to avoid misinterpreting the numbers as a sign of market recovery.
And speaking of obligations, it's important to note the broader economic implications. For instance, the youth jobless rate in Canada has jumped to 14.6%, the highest since 2010, excluding the pandemic. This is largely attributed to a surge in student immigration, which has increased the labor supply beyond what the market can currently absorb. It shows how interconnected our economic factors are.
That's a good point, Janine. These interconnected issues remind us of the importance of comprehensive economic strategies. Now, shifting our focus to Toronto's condo market, we see it's facing significant challenges. Condo prices have been on a decline for 4 straight months, marking the beginning of a second leg correction.
Yes, the benchmark condo price fell to $490,600 in July, which is a 5.4% decrease year over year and 14.1% below the peak. This is particularly troubling because only 1 in 5 households earns enough to afford these so-called starter homes. It limits the potential for demand recovery in the short term.
And with new condo starts down by 60% year over year, the construction pipeline is drying up. RBC warns that pre-construction sales are weak, which could lead to an 80% additional decline in starts by December 2026. This is a clear indication of the difficult road ahead for the Toronto condo market.
It's a complex situation, Steve. Efforts to revive demand seem to clash with the consequences of previous policy-driven building booms, which have inflated construction costs, making prices unaffordable for many buyers. It's crucial to address these challenges holistically to stabilize the market.
Now let's take a look at today's mortgage rates in Canada. As we approach the end of August, mortgage rates have remained relatively stable. The most significant movement we've seen recently was on August 1st, when a drop in U.S. government bond yields led to a corresponding decrease in Canadian yields. This has allowed lenders to offer slightly lower fixed-rate mortgages over the past couple of weeks.
That's right, Steve. As of August 22nd, brokerages are offering 3- and 5-year fixed rates around 3.9%, and in some cases, even a 3.69% 3-year fixed rate has emerged. However, the rates at Canada's biggest banks are generally above 4%.
The trajectory for fixed rates remains uncertain due to the fluctuating bond yields. They've been a bit choppy, rising slightly last week only to dip again more recently. It's likely that fixed rates will hold steady for the next few days. As for variable rates, they're expected to stay in the 4 to 4.5% range until at least September 17th, when the Bank of Canada will make its next overnight rate decision.
And it's important to remember, Steve, that while a rate cut in September could lower variable rates, it's not guaranteed. There's still a lot of uncertainty in the economy. Currently, the lowest variable rates at brokerages are around 4%, but they're higher at the major banks.
Looking ahead, economists have mixed expectations for the Bank of Canada's overnight rate. Some anticipate no change, while others foresee modest declines by the end of the year. For instance, Scotiabank predicts the overnight rate will stay at 2.75%, whereas TD expects it to drop to 2.25%. Such changes could affect variable rates by up to 0.5%.
With all these factors in play, it's crucial for potential homebuyers to stay informed and consider all aspects of a mortgage offer, not just the rate. Prepayment privileges, portability, and other terms can significantly impact the overall mortgage experience.
Absolutely, Janine. For those ready to pursue a mortgage, it's essential to build up down payment savings, maintain a good credit score, and know what you're looking for in a home. Engaging with a mortgage professional can provide clarity and guidance through the process.
And remember, getting quotes from lenders is a low-pressure step. It doesn't commit you to a particular rate or lender. It's a chance to gather information and ask questions about the mortgage application process.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.